Welcome to RANsquawk's EU morning briefing for Thursday, 5th of November 2009. Take a look at where we stand at the moment. At the market open in the UK and Europe, we're still pretty much a reaction in terms of the FOMC rate decision. The curve, the US curve, still trading somewhat steeper, given the fact that the Fed did keep that language that they would keep rates low for an extended period after there was some speculation creeping in throughout the previous weeks that they could begin to alter that language in order to prepare for any exit strategies. But again, they remained with that same language in regards to the rates. In terms of the dollar index, though, that's seen some fluctuation, a bit of a pair back. Obviously, it did move lower on the announcement yesterday. We have traded up as high as 0.25% this morning, which has weighed on the energy complex and sent crude down near $1 on the session. And that in turn has weighed on some of the basic materials stocks, with stocks also coming under some pressure after quite a raft of UK and European corporate earnings which were more bad than good. One in particular was Commerzbank. They came out and they reported a Q3 net interest income ex-risk provisions at 1.77 billion, which was less than the expected 1.81, and they see lower trading profit compared with Q3, and says goodwill review resulted in a 650 million write-down at the bank. On the flip side, though, there was some positive out of BNP Paribas, who have actually bucked the trend from their European banking peers, trading in slight positive territory, as after they had a Q3 net of 1.305 billion above the expected 1.26. Elsewhere, just in terms of other news that we have seen overnight out of Asia, we saw the Bank of Japan minutes. They said the funding conditions of smaller firms are still severe, some concern over calendar and fiscal year-end funding, a hesitation on ending corporate assistance as it might spark speculation of more exit moves, and most agreed in order to keep an easy policy. Elsewhere from PBOC, their assistant governor as well spoke overnight and said would stick to their appropriately relaxed monetary policy stance and also ensure appropriate amount of liquidity into the banking system. Other than that, though, attention now is very much geared up towards the Bank of England and ECB. Most notably, the Bank of England could herald the most surprises. The actual interest rate itself, all analysts or economists going for an unchanged to rates remain on hold at 0.5%. It's the QE that's being called into question today, and whether or not they will indeed increase that from that already 175 billion that they've purchased. Again, the general consensus is pretty mixed, somewhat slightly tilted to an increase of 50 billion for the 48 economists surveyed on Bloomberg. However, some are also around 25% going for a 25 increase, and some even a smaller minority for an unchanged decision on the QE programme. The ECB, that seems to be somewhat more straightforward, with ECB's Trichet in the press conference looking to keep things and the language very much similar to what we've seen, and also for the rates to remain at 1%. Again, that rate decision at 12.45. Bank of England then, that's due at 12. Another US data we'll be looking out for will be the weekly jobless claims. They'll be due at 1:30 London time, so 7:30 in Chicago. We'll then also see the Canadian PMI alongside Canadian building permits. Energy traders will get the EIA natural gas storage change. We are anticipating the increase to 30 BCS from last week's 25. And then also from UK markets at 3 o'clock this afternoon, we'll look out for the NISA GDP estimates. Speaker-wise, obviously Trichet's conference, that'll take precedence, giving most analysts expecting the rate decision to be a non-event and to be kept at 1%, and that's at 1:30. Treasury's Cohen's due at 3 o'clock and Treasury's Bar due at 6:30.